Hello everyone, this is Jay, and right now my dividend portfolio is at $15,369 in the green by 7%, even with all the stock market volatility that has been happening as of lately. But one thing I have noticed is that the tech sector has been selling off. My growth portfolio, the market value of it, has been going down as of lately. The good thing is that my positions are still in the green, which is awesome. But there might be an opportunity to add some more to one of my positions, which is Amazon, especially after earnings. We're going to take a look at it very quickly a little bit later in the video. But let's go back into my dividend portfolio, which is this one right here. And most of my positions are in the green. Even all realty income from the real estate sector is in the green by almost 1%. Vici is another one up 5% as of right now, but I was buying these two real estate companies while the interest rates were high and there was no interest rate cuts coming near or anytime soon. But right now they are talking a lot about starting to cut interest rates in September. There might be a cut in September, but as of right now, I'm gonna hold my positions right there in the green. Vici was one that was in the July weekly challenge, and if we go right here into my spreadsheet, I made my last purchase of Vici, which it was $15.50 at a share price of $31.31. As you can see, in the last month, it has been going up in share price. When I started the weekly challenge, it was at $27.63 on July 5th. But now in my last purchase on July 30th, it was at $31.31. I pretty much bought about 2.5 shares, maybe a little bit more than 2.5 shares in this weekly challenge, which is awesome. I'm gonna see which stocks I'm gonna select for August weekly challenge. Leave me in the comment section if there's one of my holdings that you think I should add to that weekly challenge. I really would like to know your opinion. Then if we go back, the positions that I'm going to be focusing on is going to be 4 of the positions that are in the red, and one of them is going to be Starbucks. Right now I'm at 8.1 shares. The share price is at $75.11. My cost per share, $83.58. I have been working on my cost per share, which is great. I like to see it going down. And I'm in the negative by 10% in this position, as you can see right here. But Starbucks has been having some shaky earnings as of lately this past quarter. I have not taken a look at the last earnings call, which it was this week if I'm not mistaken. But I'm going to take a look at it. I'm not going to let 1 or 2 quarters dictate what the opinion that I have in the company. I do believe that consumer spending will get better in the future. And that's why I'm buying the company, and I'm going to be holding for the long term. I'm not trying to buy it for now. And it is one that I do believe in long term. But if the earnings continue to be bad in the next year or two, then I might change my mind. But as of right now, I'm going to continue buying Starbucks. Then the next one is going to be Visa. It has to be Visa. I have to build this position. That's the feeling that I have as of right now. Leave me your opinion in the comment section. But 2.1 shares as of right now. My cost per share is at $269, and right now the share price is at $265. I'm in the negative by 1%. I wish it would have stayed in the $250. It was like around $253, $255. I wish it would have stayed like that a couple more weeks, but it did not. The investors out there, of course, caught up to it. They saw the dip and they started buying because it is a great opportunity, in my opinion, right? There's a lot of future growth projected, which is going to be awesome. If we go into my stock analysis tab, as of right now, it is pre-market right now today is down 0.27%, which is good because I'm going to be buying today. I'm going to be making my deposit later today. But if you guys see, the PE ratio right now is at 28.47, and the forward PE, which is projected to be at 24.17 if you buy any shares today. So I'm going to be buying today. I do believe in the company long term. They are expanding internationally very, very good. And the consumer spending would continue to get better in the future, especially with interest rates coming up, hopefully. So I do believe in this company long term. Then if we go back into my dividend portfolio, another one that I want to continue building is going to be PFE Pfizer. I haven't been buying as of lately. I bought very little. It has a very high yield. Right now, my yield on cost is at 5.17. I do believe 5.17%. I do believe you could grab it right now with a higher yield than I have. But I am at 16.3 shares. The share price is at $30.65, and my cost per share is at $32.50. So this one is gonna be one of my last purchases today, but I do want to buy some more Pfizer. And then my last one is going to be Kenvue, ticker symbol KVUE. 20.7 shares as of right now. I bought one share last week. I'm gonna try to buy one whole share this week, or maybe $10 only, which is gonna be about half a share. So I'm still debating on that. My cost per share is at $21.17, and the price right now is $18.63. This one I'm in the negative by 12% pretty much. But it is a company also that I believe in it long term. So I want to continue building this position, especially these ones are higher yielders right now. And my yield on cost is at 3.87%. I do believe if you pick up any shares right now, they are closer to 4%, or they are even at 4% already in dividend yield. So these are the 4 companies that I'm going to be focusing on this week, that I'm going to be buying more of. So leave me your opinion in the comment section. Which companies are you buying as of lately? And then now I want to show my growth portfolio very quickly, which I haven't given an update in quite some time. So it's going to be surprising, but this is it. This is my growth portfolio. To anyone that is new to the channel, don't forget to subscribe. This one I haven't shown in the past 2-3 months pretty much, but I have been building up my cash, which is right now at $101. My cash position in this portfolio. As you can see, this portfolio, I started it not long ago, and I've been just depositing like $20 every week pretty much. And that's how I have been doing with this portfolio. I want to grow it and see how it grows, or how it does moving forward. But this one is pretty tech heavy as of right now. I do believe in VGT long term, which is one of my largest positions right now. But Amazon is the one that I only bought about $25 into this position. My market value is at $34. So if you see, let me hide this column so I can have all the information right here together. If you see my growth portfolio, all of my positions are in the green. Amazon, 38% in the green. I wish I would have bought a ton more. If I would have had money like maybe other investors out there, right? I would have bought when it was in the $120, $130. I would have bought a lot more. I would have bought tons of shares because I believed in Amazon long term. Right now, if we go back into the stock analysis tab and we go into Amazon, they announced earnings. And right now, pre-market, it is at $168, down in the negative 8%, over 8%. I do believe this is an opportunity right here for me to continue to add more. Don't add or don't buy Amazon just because I mentioned it in this video, okay? Always do your research. But I do believe in Amazon long term. And if we go into my other tab where it shows the earnings that they just announced, the earnings were called at $1.26, the earnings per share, I'm sorry, $1.26 this quarter versus expected $1.03. That was what was expected. Then revenue, it was down. It was expected at $148 billion, and they announced $147 billion. Two of the key numbers that Wall Street is looking into is AWS, which is Amazon Web Services, and they beat at $26.3 billion, where it was expected at $26 billion flat. And then advertising, They were down actually this quarter from expected $13 billion in revenue to $12.8 billion in revenue. As of right now, Amazon forecasts revenue in the current quarter, which is the third quarter, to be between 154 billion and 158.5 billion, representing growth of 8 to 11% year over year. I do believe Amazon is going to continue doing good. Long term, especially they continue to grow their services, which is going to be very good. And then financials, if you guys see, let me see if I can open up, but the revenue just continues to grow and grow and grow. And trailing 12 months as of right now is $604 billion. But if we open the quarterly, one thing that they always have is that the fourth quarter is always their strongest quarter. But if you see quarterly, it just continues to grow and grow in revenue. Now, of course, there's more numbers that you got to look into, right? More financials. But I do like to look at the revenue. And this company is just continuing to grow and grow and grow. And I do expect it to continue to grow. All of their services are getting better and better as time goes on. And I do believe in this company long term. So right now, I believe at 167, around that price, is going to be a good opportunity for me to buy some more and hold long term. Remember, I'm buying these companies, but I'm planning on holding 5 years or more into these companies, especially on Amazon. I think Amazon is going to be one. Let me go back into my growth portfolio. Amazon is going to be one that I'm probably holding even longer just because I believe in the company long term. And I think out of this $100, I'm going to put a big chunk of it today. How much do you think I should put? I'm going to deposit another $20 just to put it on there. Maybe I should put all $100 into Amazon. I do believe this is a good opportunity. Leave me your opinion in the comment section. What do you think about Amazon? Do you hold Amazon in your portfolio? And I would really like to know your opinion on it. Another one is Google that has been going down as of lately. It's at $170. I also really, really like Google. And right now I'm up 19%. I was buying when it dipped around $140. If you see my cost per share, $142. And right now the share price is at 170. So this one is one that I took an opportunity on a dip, like the way Amazon just dipped after earnings. And as you can see, I did good. I made a good decision. I bought Google on a dip. And right now I am up 19% in my position. All right, everyone. Please don't forget to hit the like button, subscribe to the channel. Leave me your opinion in the comment section. Do you like that I did a quick update on both of my portfolios? And then maybe I'll do this moving forward if you don't mind the longer videos. All right, everyone. I hope you enjoyed this one, and I'll see you on the next one. Thank you. Disclaimer, I'm not a financial advisor, and this is for entertainment purposes only. Please do your due diligence and research before investing in the stock market. Thank you.